Okay, good morning, everyone. So a quick recap of yesterday. We had the FOMC come out. Everything as expected, you could say, everything on hold. But then the March rate cuts were postponed, to say the least, and they were pushed back. That was the only surprise, and the market did drop. So now we have, and by the way, that was following yesterday, sorry, the day before, where we had some, high-flying Magnificent Sevens give out overall bad earnings. I think Microsoft did okay, but the rest were pretty, were underperformed. So we have technicals, fundamentals, everything kind of looking negative for the first time in a while. Let's just look very quickly. I'm going to look at some different assets, just very quickly. The Nasdaq, because that's the high flyers. We've got very steep ascending. Obviously, these things have bounced enormously. And look at this. Here we're starting to hit, today, let's see, we probably decline a bit more because we close at low of day. So, that's unfinished business. We're probably going to go back to here, right? The latest breakout zone. So maybe a bit more, a small bounce here probably, but let's see if we close below there. Remember today was Thursday, so if we close below there, we could have, well, obviously Friday would be more important, but the weekly candle could start looking very bad for a short-term continuation of the drop. Dow Jones, similar stuff. Look at that. That's crazy. That should come down a bit more, shouldn't it? You can't even draw an ascending line because the pivot is just so close. But now something else. I don't want to go through too many of the markets. I know you guys prefer commodities, but okay, same thing with the Russell. The S&P, same thing. Look at this. We're all the way back there. So at least a bit of a drop back down to old breakout and also closed at low of day. Now, the most important thing is probably the banks. Now, the XLFs, the senior banks, that's done very well. That was on its way to hitting its old time high, and it would have continued like everything else. Although that's still asking quite a bit. However, look at this big bearish engulfing. More importantly, actually, and the KBE you can see is far from it. The smaller banks are far from the strength that the seniors had. But the KRE is the weakest again, and I think it's time to revisit. I used to cover, the markets and the banks quite a lot, and then everything started to go up, and people preferred commodities. I said, okay, I'll just stick to commodities. But I think it's time to revisit some of this. Look at this. Okay, close also at low of day, down 6%. It's back at kind of a bit of a support zone. However, let's be honest, we'll continue down today. Maybe we hit a bit of support around 48. Well, if we start to close below 48, continue down on Friday, if we start, trading around the 46 zone, that's looking very weak again. That's when you start having to put in some ascendings, something like this, So, and that's obviously because the rate cuts that everyone envisioned to happen so early, that was supposed to help out the banks because they're going to run out of their liquidity program. But now that's pushed back. You could start to see some serious selling in the banks, the KRE in particular, and that could take down the markets again. And remember, that's the only thing, you know, we're going to look at gold and silver very quickly, but gold and silver, they've been underperforming. Not actually gold and silver, the miners have been underperforming for months. Yeah, they're just, market goes up, these things go sideways or maybe even down. Market goes down, they go down. Dollar goes up, they go down. Dollar goes down, they hardly, it's just like every equation equals minus sideways to down, unfortunately. The only time the miners have really outperformed is when there's been a banking crisis. A few, during this big flush here. Sorry, no point in zooming out. This period here, April, for example. I'm pretty sure if we look at the miners, they did well then. Bitcoin did well too during that period, but the miners started to outperform quite quickly, the gold and the miners. And I think the one way we can rebalance what's happened the last couple of months is actually to have a banking crisis return, which could happen. And then you could see gold and the miners break out. Gold definitely new highs in 2 days. Miners start to really push up if it acts like last time, whilst the market comes down. And then you got everything rebalanced again. So it's just something I've been thinking about. Actually, I was thinking about it a couple of days ago, thinking, what could bring us back to an equilibrium, so to speak. And then all of a sudden we have this following the Fed. So anyway, banks look bad. Um, Another interesting point is bonds have come, sorry, the yields have come down, right? 30-year, 10-year, obviously they come down because of the new priced in reality. However, I thought it would be the other way around. I thought yields would go up and the dollar would sort of go sideways to down. I thought the dollar would underperform yields, but actually yields have underperformed the dollar, right? Look, yields down, dollar sideways to even up. Now, one other thing I should have covered maybe the dollar earlier, but look, it's closed every single day these last 2 weeks of trading below this descending, which I think is very important. And look, even here this Wednesday, now, but that's a strong close, right? Compared to the last couple of trading days. It looks like it wants to break out. Obviously, this morning we have this move. It could just end up being a red candle. It closes a low day here, and then it's bearish again, and we're looking down here. But so far, it looks like the dollar wants to go up here. And if yields bounce, that will actually help the dollar. But it looks like the dollar is outperforming yields, and that feels like a bit of a fear play. Think about it. People buy the dollar when they're scared, right? Not always. I know there were some periods when they didn't, but 90% of the time they do. People buy bonds when they're scared, yields go down. That reflects what's happening the last 2 days. Dollar up because it's bought, yields down because bonds are bought. Gold up, that's kind of happened too. Let's look at gold real quick. Gold up, especially, not especially, but the last 2 days also. So I feel like gold is going up with the dollar and with bonds, not yields, with bonds as a bit of a fear trade. And then the market's getting sold off because of fear. So I feel like there's a bit of a fear momentum out there. And the banks may be the reason, the rate cuts, the yields, the banks. So everything is coalescing. And it would be interesting to see if the miners outperform if there's a drop, or maybe even go up and definitely outperform if there's a drop in the markets. The miners, by the way, looks pretty bad, the candle. It's not the biggest drop. I mean, 1.3% is okay, down 1.3, given the market was down, like 1.5, 2.5 if you take into the Russell. But one other thing I want to mention is the SILJ that was outperforming. Remember at the end of last week, I covered that. In fact, the last video I did was the portfolio update on Sunday, so I only had Friday's candle to go by. But SILJ was outperforming, everything else. Let's look at GDX. If you look at GDX, look where that was on Friday, all the way here. So that looks bad while SILJ is all the way up there. But then what happened is, we rebalanced there too. SILJ is not supposed to be outperforming when everything's going down, but down it went, and now SILJ is looking the weakest compared to GDX and even GDXJ. So, for now we're going down with the markets, but let's see if a banking crisis takes shape and then we actually go up as the markets go down. Otherwise, let's see if we can at least outperform on the way down. But otherwise, if we do go down, that's the last thing we need, because some of these miners are just absolutely the dumpster. You need to make sure you have cash and you're not all in. It's a bit late to say that, but even now, like me, I've got about 30% sidelines. I'm not going to be going all in, because even though I don't think it makes sense, if the market starts to go down and takes down the miners can always go down. You can always cut something in two, something can go down by 50% into infinity. So I'm not saying that's going to happen, but it can always go lower than you think, and it usually does, especially the miners. But the bounce will be amazing, and it'll be worth it if you still have cash to buy the bottom, if you can time it. So there you go. That's the wrap. I didn't really want to say anything else. Copper down with the markets, but otherwise it's tested its resistance 3.95. That's nice to see the technicals working. Natural gas doing what it always does. Look at this, close at low of day below support, but then bouncing back. And now we're probably going to go up again. It's just there to destroy technical traders. So that's why you got to zoom out and say, oh, that's a low, it should go up. I mean, that's a buy, Jesus Christ. Oil, they broke out of this little descending, went all the way up. I thought it would hit 80, it hit 79 point something, just about. And now we're back at the breakout. So technicals working nicely there. Uranium bounced off this gap fill. Maybe we're gonna postpone that breakout because the market crashes, and uranium will probably just go down a little bit. That'll definitely outperform the market on the way down and on the way up, actually. So maybe you get to see that come back down here, at least if the market crashes. Platinum, palladium bounced off this support finally. Same with palladium. You see that did what natural gas will probably do. And that's why I said it just flushed the whole support, but it's too much. So now we bounce. And gold still, actually silver, I didn't cover silver real quick. I think silver was red, which kind of indicates Yeah, red, not too red, but indicates more of a fear trade, where people buy gold rather than silver, because at the moment silver is more of an industrial metal than a monetary one, at least in the trading world. So that'll do. That's everything covered quite quickly. I may have to cover the markets and the banks if we start to flush a bit, and I think that makes sense. So good luck today and tomorrow.